Hello, hi. So today we're going to talk about corrections in the market. As you know, in last 1 month we were seeing a correction. As of now, in this specifically in the BSE small cap space. So most of the retail investors who are invested in the small and micro caps stocks, they see a correction. And if you see BSE small cap index, it is in last 1 month, say suppose it was on 3rd of August, it was around 27K, and now it has come down to 25,750. So this is close. Yeah, it's a fall and it's a correction, and which is quite normal. If you see the long-term trend of the BSE small cap index, say suppose we see the 5 years or max. So if you see there's a rally, then there is correction, rally, correction, big rally, then there is correction, big correction. So it's always there. Yeah. And people who are there in the market from last many years, or even from last say 6 or 7 years, they would know what was it like in last, say suppose 2018 peak to 2020. It was I think, in my opinion, it was devastating for the retail investor and for specifically for small cap investors. So in the last 5 years, I think this was the peak, 19K, and this is the index which fell close to 9K. Yeah, this was in continuous. It was like a slow poison, which is kind of, it was continuously falling day after day from in 2018, entire 2018, then 19, and then 20 in the beginning. So I think till March 24th, 25th, then 24th, 25th, around in March, it was a big correction again on top of it. Whatever fall you saw from 19K, and it came down to 9K or whatever. So corrections are always part and parcel, and sometimes they're extended as well. So if you see here, it was almost 2 years, 2.5 years of correction, and very most of the retail investors who are in small cap and small companies trying to find growth, they didn't make any money at all. There were corrections of, say, suppose 30%, 40%, 50%, 60% of that kind of correction was there in portfolios, and people complain. Yeah, people. Yeah, and in March, I think there was when this big fall came, there was a lot of noise to close down the market, and yeah, this was for the it was like it was already a big fall from last 2 years, and then this one created panic, and then here it was like people were like don't know whether it will go. And same we saw if we see the Nifty. I remember because I follow Nifty as well. So here, if you see here, it was at 12K, and then it fell to close to 7,500. Here it will show 8,000, but I think we saw around 7,500 at the Nifty level. And I think you need all the courage in the world to kind of uh, get at this point of time, or around this point of time, you need all the courage in the world to start buying, and this was really, really, really difficult. But we'll talk about from an average guy. Thankfully for me, I had some cash, and I had some yeah in mutual funds as well. So what I did was some cash I had, which was good amount, and I think I started buying around 18th of March, if I'm not wrong. So 18th of March, my first investment, and then slowly I started buying, and I kept buying till almost I have bought till here as well. So in last few months and till last month as well, I keep buying wherever I see the opportunity. So it's not about I bought only at this level and then okay, I didn't buy while here. I kept buying, but my biggest investment I was around this point of time, And just trust me, at that point of time, this was really difficult because always people talked about, okay, there's always the double dip recession. So it won't be one dip, it will be again another dip. And I was, even I, nobody knew, nobody knows market where exactly it's going. So it's, so I'll show you something. So probably, so they talked about 2008, 2009. So it won't be that, it won't be, I think in 2008, 2009, there was a double dip, but I don't know, it's not showing here. But people talked about in the past that it's not like, okay, it will fall. So probably here, maybe it fell here, then again it fell. So that's what they talked about. So it has fallen till here, 7,500, 8,000. Again, it will go to 4,000, 3,000, 5,000. Yeah. So this was the talk that it won't stay only till 8,000 or 7,000. It will go further. So it was really difficult. Even when I was investing, so when I so my thesis was, okay, at least I'll put 50% of whatever cash I have, and then we'll see if I get another dip, I'll buy. So 50% of cash I was deployed, and then I couldn't resist myself. And then when I saw that there is some bit of movement up, and I remember there was talks on news channel that there could be another big dip because it's always double dip, things like that. But I kept on. I thought, okay, anyhow, if it comes double dip, I'll buy more. So I put all 100% of my cash around that time, and then whenever the new money came, I kept buying it. I kept buying it. So this is about what we did in that correction, but mostly the what why I describe this and why I explain this, because it's the correction is part and parcel of this game. So you cannot have a big rally and then there won't be any correction. There will always be some correction. So it's there always. So some more points I'll just share, and then I'll talk about some rules which we follow. So here is one guy who talks about, see, if you in 2009 it's late to buy Amazon, then in 2010 he bought it, and you know Amazon where exactly same with Netflix, same with other companies. So there's never a correct time to buy it. It's always like, you, if you cannot buy it here, you cannot buy it here. You won't buy it here. You won't buy here as well. And when it's rallying, you won't buy there as well. So if you cannot buy, there is no correct time. It's always like, it's the buying stocks is like buying your monthly groceries. So you have to buy whenever you have some cash, and you can keep some cash in case you want to see if there is some correction, and then you can deploy. You can keep some cash, but regularly you have to buy. You cannot time it. You cannot time the markets. Then there's one more guy. So yeah, there's this fall which we see here in last 1 month, and after this there's a lot of people who, I told you there is a correction, it's coming. So there's this guy, he put it here in the tweet that people predicted in May 20, September 20, December, and I know people who have in US who have predicted crash in from 2012, 2010, 2013, and it never happened till 2020. So you don't know when the correction is gonna come. What you know is overall market trend is upwards, and that's why you keep buying. You can buy here, you can buy here, you can buy here. So yeah, you'll be always buying like your monthly groceries. So that's the okay. I cannot get my tweets from March or April, and I normally do not talk at that point of time. I never like talking about markets and time. But this was one tweet which I found. This was in June. If last 2 months was a great opportunity to add average, but that will and courage would only come if we read about business. So if you read about business, then only you can add more, or you can, yeah, you find the opportunity when you see the correction. So yeah, this was I think I started, yeah, this was in March, this was in June. I normally don't like to put it on the tweets, and I earlier, now I kind of I write about it, but mostly I, because as they say, the people who know, they don't talk much, and yeah, the people who don't know much, they talk a lot. So it's all up to you. Okay, yeah. So market. how do we play in the markets? It's all up to you. It's not about you have to follow somebody and you just follow their approach or whatever. It's completely personal, I would say, and that's the reason. Yeah, make your own set of rules and yeah, do investing, but never get fearful with the correction. There will be correction, and I can tell you this was the most gruesome correction from 2018. People who invested here, and then from 2018, even I was one of them, where because I have started around 2014-15 in investing, and then yeah, I made my own set of mistakes. But here, yeah, this was the most gruesome correction here till. But here, this was the biggest good luck point kind of thing for in the markets for us, where we accumulated like anything. So yeah, it's a lot of luck, lot of understanding, a lot of experiences. You need a lot of readings. You need to do about different books to understand and how to behave or how to react in market. So let me talk about certain rules which I follow. Yeah. So yeah. So for one thing is very first thing you do follow trends or theses which you have built. Okay, these are the companies which I would like to buy or whatever. So for example, recently I made a video on two stocks from power sector in India, which I shared with you guys, where I shared Tata Power and CG Power. So these are you can maybe if you like it, you can go through, you can subscribe my channel and like it. But yeah, so this is very recent, I think August 17, where I like these two, because I see that there is a lot of in power sector it hasn't performed in last 10 years. So I see a reversal of cycle, and then these are the two stocks which I like from power sector. So you make a trend or thesis you have built, that is a very very initial step. Then you diversify, which is, and that's how we reduce the risk. It's all up to you, and as I told you, it's all personal. It's not about this guy is doing this way, I should do the same way. No, it's all up to you. Keep the number of stocks you like. It's all up to you. You like keeping 10 stocks, keep it 10, 12, 15, 20, 50, 100, whatever. It's all up to you. But diversify. Don't keep all your money in, say, suppose 5 or 7 stocks. I don't recommend it, because whatever I see new investors, I see investors losing big money, because it's your money, and don't lose it. So better to diversify, and it's good to say, okay, so if you have put good money in Amazon, it's all good in hindsight, but it's not like that. You don't know which one will perform. You know that you just make your thesis. You don't know which one will go like big bazooka, which one will just dump. Yeah, so you don't know. So that's why we diversify. We diversify, say you diversify till 20, 30 stocks, or you can increase more as you like, but please, I would recommend to diversify, because uh, uh, we are fully confident. Just I'll take an example of driving. We are fully confident. We know the driving, but still accidents do happen, and sometimes because of other issues and other people mistake. Same with the thesis, you have built the thesis. Same with investing, you have built the thesis, you have built, you see there is a trend, positive trend in a particular sector, but still things can go wrong because of government policies, because of management, because of company doing something bad, or yeah, it could be anything. So always diversify. Then how do we reduce our risk? It's like you can keep plucking the flowers on the top. So say suppose your one of your investment is going up, and say it has moved, say 5x, 10x or whatever. Then slowly start reducing some part of the money. You can take it out. Yeah, there are, so it's all as I told in the beginning, it's all personal. Some people will say no, you should keep always, don't sell even a single. So it's all up to you. In some stocks, even I don't sell a single stock. In some stocks, I slowly reduce. Because why I'm saying so? Because some you don't know if the cycle reverses, and then you don't make money for next 3 4 years. At least if you have made some, say suppose you have taken down some 10-20% or 30% of your holding in one stock, which has gone up say 5x or 6x, then you can use that money to add a new thesis or new investment, and that's how you grow your money or grow your wealth. And then important point is, yeah, keep adding. Second step is to add new thesis investment. Like from here, you can keep plucking the flowers slowly, 10%, 15%, the ones which have gone up like anything. And you can always, apart from that also, you can always add cash. You can always buy, like how you buy your monthly groceries from Big Basket or wherever. So similarly, you have to buy your monthly investment. So keep a habit of buying them, and yeah, you just uh, make a thesis, make an investment, and based on that, and then you just follow it for years, and it's like, okay, anyhow you're building the wealth for long term. So and fourth important point is average up rather than average down. So and this and this are kind of they can be combined, so don't catch a falling knife. So suppose some stock which is falling and it has started falling from, say, suppose 100 to 50, 50 to 40. So don't start catching it, because you never know. You thought, okay, from 100 to 40 you are buying at a very big discount. You never know, from 40 it could go to 20 and it would be 50% negative for you. So it would just need a 10-20% fall from 40 level, and for the stock, and for you it will be minus 50%. So don't catch a falling knife. Rather, I would recommend always average up rather than average down, because when things are moving and then the stock is moving up, and then you see the earnings, you read the quarterly reports or earnings call, you read about that, and you see there is a positive trend in the sector, then you realize, okay, there is something good which is going to happen. And it's fine if you buy, you say, suppose you didn't bought at 10, you bought it at 20, 30. It's fine, it's not a big deal. So I would recommend always average up rather than average down. Yeah, this is the last step which even I'm practicing, and sometimes I follow, sometimes I don't. But yeah, if you feel that, okay, there's some stock which I haven't read much, I don't know much, and still I've added, and get out of that stock. If say it falls, say suppose 50% or sorry 15%, so keep a mental stop loss or whatever, because that's how you protect your money. This step is to protect your money. So say suppose some stock, you bought it at some price, say 100, and it started falling, and it has started falling, and you're not very sure on the thesis and on the investment, then maybe it's better to get out of it. If you're not very sure, say suppose it has fallen to 85 level, 80s level from 100, then it's already 20% down, then you can get out of it if you're not very sure. And if you are sure, then you know the thesis, you have read well, and you can handle volatility, say suppose 15-20%, then it's fine to keep it. And so it's all personal. I told you, you can keep some stocks even. I have very strong belief that they'll do well, and even if they fall 15-20%, I keep it. I don't mind selling it. But this is only for the stocks which have, this point is only for stock which has fallen from your buying price. So if it has fallen from your buying price, say suppose 15-20%, then you decide whether you want to keep it or you want to get rid of it. Do you understand the thesis? You know well, and you know it's all fine. I'll handle the volatility. Keep it. If you don't, you're not very sure, get out of it. This 15% is only when from your buying price. For the stocks which has gone up like 5-6x, and then they are falling say 15-20%, I don't care. I don't touch my investment which has gone up say 3x, 4x, 5x, 10x. I don't care about them. I just let them fall, do whatever dance they want to do. I don't care. And yeah, so I'm fine. Last thing is, it's fine. So when you're diversifying well, and say suppose you in one stock you have put hardly 3-4%, and that's fine. And then max you lose 100% of that 3-4%. So you say suppose you have 100 rupees, and then you put 5 rupees in one stock, and then accordingly you put 20 stocks. Out of the 100 rupees max, you can lose that 5 rupees in one stock, but the gain could be like big and huge. So yeah, this is one way to, and that's why I recommend diversifying. So yeah, this is about correction, risk, and how to trade or invest in the market. If you like the video, please like, subscribe, share with people, because I was just recently started on YouTube. I used to keep my thinking and thesis personal, but I've recently started and putting on YouTube and Twitter. If you, yeah, you Abhi Phoenix, this is my Twitter handle. I can mention in the video as well. Standard disclaimer, please. I'm not a SEBI registered financial advisor. Please or follow your financial advisor. And yeah, always diversify. That's one more thing which I would recommend to reduce risk in the markets. Thank you for watching, and good day.